connect with Deven Choksey, who's now joining in on the show to share with us his outlook on the markets. Deven, thanks so much for taking time out. Let's begin then by getting your take on Hindalco, Coal India, Adani Ports, lots of numbers that are expected later today. Are you working with any expectations in particular for Coal India and Hindalco?
Yeah, Irfan, good morning. Particularly for Coal India, I think the numbers are likely to be on a higher side, largely because of the fact that I think the volume numbers, I must say, I think are likely to be on a higher side due to the fact that I think higher production is now sustaining at elevated levels. Maybe I think the price in the open auctions, I think, has also fetched a better realization. To a greater extent, I think that should also get reflected positively into the numbers of the company. So overall, I think the balance sheet, I think, looks, I think, relatively more positive than what we have seen up till now in case of Coal India, and that's where probably one could possibly argue for relatively better numbers and the profits hereafter.
Sure. Deveen, what's your take regarding the pharma space? The earnings have been really solid this time. Overnight, of course, even Torrent Pharma, Gland Pharma managed to surprise positively. Are you looking at any of these names?
Well, I guess I think the companies in pharma where the specialty generic products portfolio has started showing relatively better amount of profit margins for those companies which includes likes of Cipla, likes of Sun Pharma. I do not know, I think, whether the mid-tier companies are equally well placed as far as I think higher amount of profitability is concerned. Maybe I think the issues which bothered them in the previous quarters, I guess I think those issues are out of the way and they should be reflected well with the current quarter's numbers as far as the business is concerned. Maybe I think some amount of margin improvement in respective cases, I think one could possibly argue for. Also because of the fact that the raw material prices, particularly I think the chemical prices have remained on a relatively softer side in this particular period. So overall, in line with the trend in most of the pharma companies' numbers, you should be seeing relatively better performance coming in from many of the mid-tier pharma companies as well going forward. But we stay largely focused on some of the larger companies like Cipla, Sun Pharma, where we see the sustainability of higher amount of growth, including Dr. Reddy, of course. I think sustainability of higher amount of growth for the of the business in times to come.
All right, let's put the spotlight on PB Fintech as well, as it came out with its numbers, and you did see that sharp contraction in the net losses to just about 12 crore rupees from last year's 204 crores. And this is coming on the heels of Zomato as well, reporting a pretty healthy set of earnings. Just wanted to get in your thoughts, Deven, as to what the outlook is now that we are seeing improved financial metrics as well.
I think one of the most important factor which is happening in most of the companies, I think the technology-led businesses, including this fintech company, I feel that I think the larger amount of focus is now onto the profits and the profitability vis-a-vis acquiring the market share and generating higher amount of turnover, which is fundamentally a very positive news. I guess I think this is where probably tightening of the money supply has helped. I think some of these companies to come up with a true character in which I think they are. In my viewpoint, I guess I think this is the beginning probably of higher amount of I think profit contribution coming in from these companies. In my viewpoint, I think these particular numbers will have to look upon I think in a little bit more systematic manner. Somewhere you are likely to see I think the changes in the revenue model in respective companies without getting into specific for our company. I would say I think in general the revenue model is getting shifted to the higher amount of contribution coming into the profit. So overall, one should remain positive. However, looking at the capital employed in the business, I think one cannot argue for the valuation at this point of time. But since the loss-making proposition is out of the way, I would think that the business of this company should look reasonably steady going forward for the investors in the portfolio.
Yeah, and talking about the focus on profitability, that's quite evident by the latest move coming in from Zomato, where reports have been suggesting for the last few days that the company has started charging platform fee of rupees 2 per order, and this is happening only for select users in select market, but nonetheless it could have a very positive impact on the profitability of the company, because remember Swiggy had started charging platform fee back in April 2023 itself, and there was no major impact as far as the market share loss is concerned. So this platform fee will directly flow into the EBITDA and profits without material cost. So that means the operational profits will get that fillip and boost. In fact, analysts are penciling in that additional fee could boost the food delivery adjusted EBITDA by as much as 40 crore rupees per quarter. So that will give a lot of really support on the bottom line. So let's see how it pans out. But for now, an incrementally positive news coming in for Zomato as well. So we'll watch out for that. Separately, Deven, what's your take regarding Britannia and Godrej Consumer? Because overall the FMCG numbers were a bit subdued, a bit muted versus the expectation, though at least Godrej Consumers has managed to outshine a bit. What is your top bet in this vertical?
So I think on one side we are seeing the more amount of focus coming in on two counts. One, because of the lower input cost, I think most of these companies are relatively better off in this particular quarter. On the other side, actually the turnover of the company is reflecting a larger amount of sales directly going into the retail shops. As against earlier, the bulk turnover which used to get reported at the distributor level, now I think the turnover getting reported is at the retail shop level, which is again I think very important aspect because there is some amount of change which we are experiencing in this particular activity. As a result of which hereafter, you might see, I think, the turnover, which is basically genuinely executed turnover, which is fundamentally more important because now the companies are basically also having the point of sale integration, which is happening with their central warehouses, which probably allows them to even do the demand projections of particular products in particular territory or region. That allows them to, I think, do the production rationalization. At the same time, I think the improvement in the logistics, which results into better efficiency and better margin for this company. So I'm more particularly looking at the subject of companies getting the advantage of better efficiency, better rationalization of sales, and predictability of sales using the AI platform in likes of HUL and others. So we remain positive in this space. Britannia definitely I think looks relatively more positive, given the kind of strength the product portfolio that is demonstrating. We think that I think higher the penetration, they would have relatively better opportunities going forward in showing higher performance on a sustainable basis.
It to be a dark horse of sorts in the sector, given the fact that the earnings have been rather weak, but the big question is, has it bottomed out? And probably there's only upside from here on. Deven, what's your take? The stock has been doing pretty much all right. It's up 17% this year itself, despite the weakness we have seen in IT sector. Would you be a buyer in Tech Mahindra?
Well, some sort of conviction is coming in largely because of the fact that I think there are two important things which are happening in the universe. One is artificial intelligence and generative AI along with. At the same time, I think you are having higher amount of cloud computing demand coming in. Because of these two areas, probably the services sector in IT business particularly, I think is going to remain in demand. That is how I look at it. Maybe I think in initial quarters of this financial year, I think we have seen slower offtake of orders in most of the cases, which I believe is likely to accelerate once we see the stability coming into the rate hike cycle in US economy. That is where I am relatively more confident about that Indian IT companies model is very well positioned. Look at Tech Mahindra. They have been hiring people in the area of AI and also in cloud computing. And that is where I believe that I think they are in the right direction. Their program pertaining to the BFSI sector, pertaining to the manufacturing sector, pertaining to the retail sector. In each of these verticals, I think this company has been systematically focusing on. So maybe I think as Nikunj was saying, I guess I think the most of the companies are trying their best at this point of time in putting the right strategy forward. Maybe the results are likely to be seen. At least I think the strategies are right. Results I think to be seen going forward, and we'll have to keep on watching this particular space. We believe that I think there is a good amount of potential here. So, but we'll continue to watch this space, I think, on an increasing basis every quarter hereafter.
1183 is Tech Mahindra. In this year, it is up 16%. Let's look at the IT index in this year. How long will this party in railway stocks continue? I mean, these are businesses which are long cycle businesses. These are businesses which are 10-12% in terms of margin. These are not consumer businesses which are insulated to commodity pricing. Do you think at the current juncture, railway stocks and defense stocks which are commanding P multiple of consumer stocks is more like a euphoric bubble?
I don't know euphoric bubble, but I think definitely market is running much ahead of its time, I guess, and that is a reality. Of course, I think there are positive news flows which are coming in. You have got 508 railway stations coming up, 25,000 crores worth of rupees being spent. At the same time, I think the entire new order book position getting generated from the railway segment for most of the companies who are the suppliers. Investors probably, I think, are not very mindful about the situation that I think these businesses come with a very, very tight margin. And if you have any slippages for any reason, for some in some quarters as well, probably I think it is going to have the impact on the profits of the companies in those quarters. But that's where I think the market would probably be because at this point of time, capital goods segments, railways, defense, all these segments are generating significantly high amount of order book positions for most of the companies. And as a result of which, I think the investors are buying much in advance at this point of time. I would definitely remain cautious, would not probably, I think, participate immediately into many of these companies. Maybe the market gives you correction of sharper degrees, which we saw in February and March of this calendar year. Similar such kind of, I think, corrections, if at all market gives in, then probably I think that would be the right time to buy into these companies because the fundamentals are going to shape up over a longer period of time for sure. And any price correction would be a meaningful margin of safety for the investors to buy into at lower ends of the price.
Okay. What happens to Adani Green after the QI deal, Deven bhai?
I guess I think the company is basically simultaneously bringing in the new investors, capitalizing the portfolio of all the respective companies within the infrastructure space. And that to me, I think sounds really positive. Because on one side, you have got at a group level 60,000 crore worth of EBITDA making possibility in the current year based on the run rate that we are experiencing. On the other side, you have got around 2,25,000 crore worth of debt. And systematically, if you are bringing down the debt component even through the capital infusion, along with the generation of higher amount of cash in the business, I think to me it sounds good music to ears. Basically, that the company is basically becoming more financially disciplined hereafter. And that's where probably one can keep an eye on respective companies in the portfolio of Adani. So we remain reasonably confident about the prospects going forward for most of the infrastructure businesses, and in particular the ones which are operated by Adani. So we would remain invested, but buying afresh, I think one will definitely look at in an individual company specific basis.
Deven, I'm sure everyone's curious to know what your top recommendations are within the broader markets. I'm sure that there's been a lot of opportunities. So, what is it that you've been picking up?
So we continue to like some of the large cap companies because we believe that India's story is going to grow bigger. It is going to benefit some of the larger companies more at this point of time. Not that the mid and small size companies will not get benefited, but they are largely getting overpriced in the market largely because of the demand supply side situation of the stocks in the market. As a result of which, I think they are getting relatively more expensive. Whereas the large cap companies, say for example in banking and finance space, companies like HDFC Bank continues to be available at a valuation which is compelling at this point of time. Given the potential that the size of the balance sheet getting doubled in next 3.5, 4.5 year time, I would think that I think this kind of businesses probably would bring in a lot of new investors, some of the large investors into these companies, and that is where probably I think one can argue for buying into the large cap companies like HDFC Bank. Similarly, I think even the companies like Reliance, which is promising to unfold the valuation gain because of the separate listing of different businesses going forward. To me, I think it is available at a valuation which is far more attractive than before. You can also same way argue, I think the companies like Bajaj Finance, Bajaj Finserv, there the potential of the business is also high and at the same time the execution is also matching up with the potential. So where we believe that I think the stock prices have still not performed as much as I think they should have been performing in this kind of a market. Even likes of Tata Motors in the auto space and some of the auto ancillary companies, so they may not be I think fully large cap, but maybe I think at the higher end of the mid caps, they also remain reasonably good from investment perspective. So yes, I think we believe the big is getting bigger, and that theme is going to play out well if you are holding your investment for next 5 to 10 years.
Kunal,
We'll let you go on that note. Thanks so much for joining in. But let's find out what the